strategy. All right, so now we're at the 10 confirmation strategy. So all this really is a strategy where you use 10 confirmations. You don't need to use the exact same confirmations of me. I'm just teaching you how to use confirmations with each other. There are some confirmations or indicators that don't really agree with each other, they don't work very well with each other. Most of them do work with each other because a lot of them have very similar algorithms. So the confirmations I'll be using is identifying the trend. Is it an uptrend or is it a downtrend? Trend line, which also can be used as wedges. Like I showed you earlier, we're going to look for bounces, we're going to look for breaks and retests. Supply and demand rejection. So I'll go briefly over what supply and demand is when I get to it. If you don't know what it is, again, there's a lot of content online. You can go to my course or ask me about it. Fibonacci retracement extensions, harmonic patterns, reversal and continuation patterns, moving averages, MACD, RSI, and ADX. So these are some of the ones to be using. I'm gonna use a few more I didn't list. I'm just trying to give you examples of how to use 10 confirmations together. So the rules are at least 10 confirmations must be active to enter. So that means if you have 9 confirmations, don't enter. You have 8 confirmations, don't enter. You have 5 confirmations, don't enter. You have 10 or more, you enter. And real professionals, the one at least I've heard about, they use like 25 plus confirmations. So there's a lot more in depth you can go about it. But I've really seen that you can be profitable with less than 10 confirmations, but you're gonna see a 90% or above win rate if you follow 10 confirmations. Almost active is the same as inactive. So like I was saying, if they haven't crossed over, if the candlestick hasn't closed yet, it's not valid. Counter confirmations must be minimal. So all that means is sometimes confirmations disagree with each other, and that's okay. But if you see like a 1-to-1 or 50-50 ratio of buy and sell confirmations, don't enter. That just means there's indecision. All right, so here's an example of a sell position that I took. I entered in a sell position right where I circled where the red line is, and I took profit right where the green line is. So let me break down why I took this sell. A lower low form. So that identifies that it's now a downtrend, which is what our first confirmation is. Second confirmation, if I can move the little screen out of the way so I can see real fast. There we are. Second confirmation, the trend line break. So that is 2 confirmations. We can see price broke the trend line, indicating that the uptrend is now weakening. Now I'll get you guys the questions after I go over these 10 confirmations. I see we have a few in the chat. Trend line retest. So price broke underneath the trend line and then bounced on the underside of it, giving us another confirmation telling us that where price broke is showing resistance, meaning price is going to go down more, so we're up to 3 confirmations. The fourth one is we see that the moving averages are bearish, giving us an additional confirmation that price is in a downtrend or that's a good time for us to sell. Price retested the trend or the moving average. So you can actually use moving averages as support and resistance, just like horizontal lines or supply and demand zones. And that's our 5th confirmation. Our 6th confirmation is that price broke below a baseline. So it just shows that the average price is now lower. It's dipped below the average, giving it more of a bearish sentiment. And that's our 6th confirmation. We can see in the MACD that is bearish when the sell occurred, giving us another additional confirmation that price is going down. And then we see the ADX, we see the negative ADX line cross above the positive DI line, telling us that there is more bearish momentum than bullish momentum, giving us 9 confirmations. And then here I pull up the dollar index. If you don't know what the dollar index is, this represents the price of US dollar. And since we're looking at gold on this chart, gold does the opposite of whatever the US dollar is doing. So we can see that the US dollar is going up in that moment, which tells us that gold is most likely going down in that moment, giving us our 10th confirmation. So we had 10 confirmations in that moment that price is going down. So I took that trade, I closed, and I made a profit off that, just these 10 confirmations. And the analysis didn't take much longer than me just explaining this to you. When you're learning, yeah, it takes a little bit to recognize everything. But once you've been doing it for a month or two, it starts to get really, really fast. You can look through charts just like this and enter in a trade. You can make a few hundred, a few thousand bucks with only about 5 or 10 minutes of your time. All right, so here's another example of a sell I took, and I'll explain why I entered the sell. So we have a trend line break, just like we had in that first example, giving us our first confirmation. Price moved under baseline, telling us that the average price is now lower or it's going below the average. We have a doji candle, which shows indecision, which means price can either continue or reverse. And I gave it the benefit of the doubt of it going downward just because of all the other confirmations we had. So the doji is more of a bearish or bullish until proven bearish or bullish, but you can use it as a confirmation because that just shows that the banks and institutions are up to something. The moving averages had a bearish crossover. Right at the moment of a crossover is the best time to enter. So when it lines up with these other confirmations, that is the best opportunity for moving averages. So we see that we have it crossed over. That's our fourth confirmation. Fifth confirmation is that price retested the moving average right there. And all retest means is that it tapped it and it didn't break it. RSI is under 50, showing us that bearish momentum is above bullish momentum. MACD had a bearish crossover right here, just like the moving averages. Tell us the same thing. It's a good time to sell. The ADX trend line, which is that black line, the ADX is above 25, which indicates a trend is about to begin. And that gives us the hint that it's going to go downward because at the same time, it went above 25. The negative DI line moved above the positive DI line, showing that bearish momentum is dominant over bullish momentum, showing that a new trend is forming and bearish momentum is in the lead. Then our 10th confirmation is looking at the dollar index. Whatever the dollar does, gold does the opposite. So we see that the dollar is going up, telling me that, hey, I think gold's going down. Boom, 10 confirmations. We got on the sell. Excuse me. This trade was something about 60, 80 pips, which is about 600, 800 bucks. If you're doing a standard lot, 60, 80 bucks if you use a mini lot. So really, again, how long did it take me to do this? It took me maybe 2 to 3 minutes analyzing this chart, and that was almost $100 in a span of 10 minutes. So here's an example of a buy. I'll go over why I took, or I mean this example, yes, an example of a buy. All right, so trend line broke here, giving us our first confirmation. Trend line retest, so we see a price broke above, then started to retest it. And again, retest just means pokes at it without breaking it. Price formed a higher high, which is telling us that price is now in an uptrend, giving us 3 confirmations for a buy. The moving average had a bullish crossover down here. So we can see that the moving averages seem to think that price is bullish, giving us 4th confirmation for a buy. Now it's added on a demand zone, and we can see that there is demand rejection, which basically means that there is a surplus, which means that there needs to be more of a supply since demand has been being met repeatedly, telling us the price is going up. RSI is above 50, showing us that the momentum is mostly bullish, showing that bullish momentum is bigger than bearish momentum. The MACD has a bullish crossover, giving us our 7th confirmation. The ADX trend line is above 25, showing that a trend is forming, giving us 8. Then our 9th confirmation is the positive DI line crossed above the negative DI line, showing that bullish momentum is dominant over bearish momentum. Then we can see the ADX right here, it's going down. And again, dollar index does the opposite of whatever gold's doing. So gold shot up, giving us 10 confirmations to put in a buy. Boom. So that is the 10 pip confirmation, or I mean the 10 confirmation strategy. Look at the questions. What will these confirmations work on non-gold pairs like all majors? Yes, these will all work. It just, if you're using multi-index analysis, which means you're looking at the dollar, the yen, the pound, looking at the actual indexes, you have to make sure what currency you're looking at fits. So I'll show you an example. I'll bring up TradingView really fast. Yes, CNN is fake news. All right, so let me show you. Let's say you're looking at the most common pair, which is Euro USD. No, we're not looking at Bitcoin right now. All right, so Euro USD. So what would we look at for Euro USD? For this, I primarily look at the dollar index. So the only thing we need to do to look at the dollar index is type it in. So up here, we type in DXY, which is the symbol for the dollar index. And we can see that this has been skyrocketing up. So whatever this does, whatever the dollar is doing, Euro USD will do the opposite because the US dollar is a secondary currency in that currency pair. So the dollar will do the opposite of Euro USD. So we see it's going straight up and we go back to EURUSD, we can see it going straight down. So what can we do with this information? Let's say we're looking at the dollar index and it starts going down. We can bet that EURUSD is going to start going up if the dollar index is going down, because wherever the dollar does, EURUSD will do the opposite. So more indexes, I'll write these down so you guys can write them down. Make this text nice and big so you can see them. So DXY is the US dollar index. JPN 225 is the Japanese yen index. The Oz 200 is the Australian dollar index. Bund is basically Europe's index. This one's not very useful in my opinion because it's not quite for the euro, it's not quite for the pounds, but so. And then there is NZD, which is for the New Zealand dollar. This one really doesn't move much. I don't look at it much, but the really important ones are these first three, the first top, DXY, JPN 225, and Oz 200. These ones are the most useful. And so if you're trading a pair with a Japanese currency, you're going to look at the JPN 225. If you're looking at it with an Aussie currency, look at the Oz 200, and so on. I'm actually recording it right now, so I can just send you the link to it so you can look at it later. All right, so you guys have any last questions before we hop off? I know this was kind of longer than they've been, more in depth, but I want to get this information out there. Awesome. If you guys have any more questions, you can feel free to message me on Facebook, or whoever invited you can get your questions answered. But thank you guys for hopping on. I'm excited to look forward to doing this next week, and this will be uploaded to my YouTube channel, to my website if you ever want to go back and review it. Thank you guys for hopping on. I'll see you next week.
Thanks, Jonathan.